This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology, and we don't think about creating a culture of innovation. I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Hello and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bonds, and I'm very lucky today to be joined by Tony Lew of Insurtech New York. Tony, how are you, sir? You well?
Yeah, I'm great. Thanks for having me, Alex.
Well, thank you. Thank you for being on here. I think it's been a long time coming. Yeah, but we've talked many times throughout the years. So yeah, I'm looking forward to this conversation. So thank you for making the time. Before I dive in, I always think everyone should know who you are if they're in the world of Insurtech. But just for those strange people that have no idea who Tony is at Insurtech New York, it'd be great if you can introduce yourself and obviously the Insurtech New York setup as well.
Sure, yeah, happy to share. And there's still a lot of people who don't know us. So, if you're listening, appreciate you listening to this episode, and hopefully you get to connect online, offline. So, I'm one of the co-founders of a community organization called Insurtech NY. We created this, myself and David created this in 2019. When we recognized that there wasn't much of a community in New York for insurtechs and those in the ecosystem. And we started hosting small events, which kind of, started to take off, and then we grew our business from there. So at a high level, we now do about 4 things. We still host a couple of small events in a year, but now we've expanded it into a big conference. So we host an annual conference called the Insurtech Spring Conference in March, April timeframe in New York. It's about 1,000-person conference, and a lot of attendees have mentioned it's a very engaging conference, and that really is the case because we really try to bring people. Many of the people we know personally are invited and come to the conference. And it's really a great way for us to just connect with those in the ecosystem. We can probably get into a little more specifics after conference later, but at least that's one of the things we do, which is conference and events. The other 3, so the second thing we do is called Corporate Innovation Program. It is a program that we created for mostly incumbent carriers and brokers who are interested in getting better access to innovation and insurtechs. And so we run a couple of programs as part of that called Insurtech Match Program. We also run executive roundtables and different activities to really help incumbent carriers and brokers. We also run an accelerator called MGA Lab, where we help create new MGA businesses. And then finally, we have a venture capital fund. It's a seed stage fund, and we invest in startups.
Amazing. So many things, and I think we'll dive into all of those independently because I think what you've created is this really, and it's a really personable community that you've built, and I feel very lucky to feel part of that and have been invited into that. I've said this to you before, and I shouldn't have favorites, but it is my favorite conference to go to, and I think the size is important because it's big enough to attract the people that you want to talk to. In my case, senior leaders in the insurtech space, but it's small enough that you can tend to get those meetings that you want. Is that by design? Is that something that resonates with you? Because obviously one way to scale a conference is bigger, better every year, but it sort of brings a different type of conference together.
Yes, it definitely is by design for various reasons. So yes, one of them is it's I think it's like kind of people say it's the right size. And it's big enough, but yeah, it's not like 10,000 people, and then you get kind of lost in
Mhm.
kind of the crowd there. But it also is logistically just very difficult to, do a
Mm.
bigger conference. Like, I give a lot of credit to Insights and ITC where they're doing 3,000, 7,000. All kudos to them. I don't think I can do that. It's just a lot of work. So
Yeah.
just logistically, and their business is a conference business, so they need to grow and grow. And as I mentioned, conference is just one of the things we do. It's just a way for
Mm.
us to connect with our community, and we felt like 1,000 people is probably good enough.
Mm.
Initially, our conference was, I think, like 500 or 600, and then we
Mhm.
grew into 1,000, and we thought, hey, that's actually probably good enough for us, and also probably what we can handle.
Yeah.
Yeah,
Yeah.
yeah.
Yeah, but I think you raised an important point, and
Yeah.
I was genuinely I was at ITC London yesterday, and I was just we were just talking about it. So it was a really good event. I enjoyed it a great deal. But me and some friends were talking about conferences, and talking about the real challenge of putting on a good conference is there's this push and pull between sponsorship and then
Yeah,
having the right speakers.
yeah,
So there's no secrets out there, and there's nothing wrong with it. A lot of it's kind of pay to play. And then you sometimes go, well, are we having the most interesting conversations? Are we really tackling the issues that we want to hear about? Or are we just creating opportunities for people that have paid to be on these kind of prominent positions? And basically, it's just imperfect because the business model is a conference model. And I think what's great about Insurtech NY is that because you've got these different avenues, you're not reliant on the conference for all revenue. And as such, I think that's why I've always thought it was a better conference for me. Let's talk about this year's conference because you always have a theme, and I want to get this right. Is it humanizing insurance or is it something
human
the
side
human
of
side
insurance.
of insurance? Yeah.
Yes, yeah, it's a
What's
human side of insurance. Yeah.
yeah?
So I
So
mean,
what is yeah?
what is that? Why they do that? So
What does that mean?
it's essentially, there past couple of years, there's been fear. By the way, fear is a great motivator for a lot of things, but there's been some fear that AI could take over and put people out of their jobs, right? And what we are seeing and we had been seeing is that AI, just like it's just technology, and oftentimes I mean, not just oftentimes, they're there to help humans. That's basically what it
Mm,
is.
mm,
And so, there is always going to be some level of human interaction, and especially in the most important parts of the insurance value chain. And that what that means will continue to morph and change over time. But we just wanted to kind of put an emphasis on that. And so, and really kind of show that, hey, even if you're using AI, there's got to be humans involved. So we wanted to kind of really tackle all the way from distribution to underwriting to new product development and claims, like how are humans being engaged with different technologies that are out there. And so that's kind of the theme that we wanted to focus this year.
yeah, we talked about that a lot on the podcast for the last probably 6 months, I'm really intrigued to actually see some of the streams on this when I'm over at the event because it's something that I think people are, excuse me, obviously fearful about, but also I think there's been some flagrant disregard of those fears. Like if you're fearful, it's like, oh, you're not being innovative or you're not moving with the times. And it's going, people have a right to be fearful about not just their job in totality, it being wiped out, but also it creating a job that they don't want.
Mm.
And a real world example of this, we're a recruitment search firm for insurtechs. A lot of those are kind of tech driven MGAs. And some of the underwriters that have gone into some of these tech driven MGAs have gone, this isn't for me because they've kind of removed a lot of the kind of decision making. They've removed a lot of the kind of the actual underwriting as they saw it, and so they just weren't enjoying their role. So I think people have a right to be concerned or at least thoughtful and kind of think about it. And I think sometimes these fears are saying, well, then you're old fashioned or you don't need to move with the times. And I think that's we kept coming up with the phrase on the podcast, humanity in the loop.
Mm.
And we were usually referring to in insurance when there's always going to be a point where you probably want to talk to a human. Let's think about claims as a really good obvious example at certain points.
Yeah.
But then also, I think we have to have humanity in the loop in the decision making to deploy certain technologies because we might change people's working environment in a way that they just don't like.
Yeah. Yeah.
Um,
That's right. It's just the how they are involved will change. That's for sure. And it has continued to change over the past 100+ years that insurance has been around. And so
mm,
that will continue to be the case. But yeah, like decision making, or yeah, which software to use, but also like how the algorithms are going to be, programmed, how things are going to be programmed, right? I think there's a lot of humans definitely need and will continue to be involved.
mm. I hope so because
Yeah.
otherwise my business is doomed.
Well, we're gonna continue. You need to. Well, that's the thing, right? We need to continue to evolve,
Yeah.
and I think that's why it's important to keep up to date with what's happening in technology and
Mm,
AI, and so you can adapt to it. And you
mm.
can't just sit still. That's for sure. The
Yeah.
incumbents who are just sitting still and not understanding or and keeping up to date, they will fall behind eventually.
Yeah, yeah, no, exactly, and I think that's why I think things like conferences are important because it's visibility of technology, it's visibility of issues around it.
Yeah.
You're usually hearing from someone that's kind of ahead of you in the curve. They might have rolled out different technology platforms, and I think those things are really really important. Um, let's, are there any kind of new, walk us through the
Yeah.
Insurtech NY conference. You do some
Yeah.
great stuff. There's a really good startup, pitch competition, which I think is
Yeah.
interesting. But yeah, what can we expect from this the event this year?
Sure. Yeah. So there's a few things. First are we have some amazing speakers who will be kind of speaking on this topic, both on PNC and life and health. So that's something we've been doing the past few years is have a separate track for PNC people
Mhm.
and then life and health people. There are some who overlap, like you probably overlap both, but most PNC
Mm,
carriers and brokers tend to not really, focus on life and health and vice versa. So we separated them out. But
mm,
but we for both of them, both tracks, we start from distribution related claims and different topics around technology as well. But we also have some keynote that kind of spans across. We always have a CEO panel, and this year's CEO panel, I'm really excited. We have three CEOs from three carriers, Chris from Incline Insurance, Greg from Vantage Group, and then Garo from NICEF will be on a panel of human side of insurance with the topic of the panel. So we're excited about that on day two. By the way, the conference date is March 30, 31st. So excited about that. We also have different competition. We always do our final pitch competition for our global startup competition. It's for
mhm.
early stage startups. And so we'll have 10 finalists pitch that. Our actually application for that competition ends next Monday. I guess it will probably end before by the time this podcast is published. But
No, we'll Tony will clip it and get it out. Then we'll get the clip out, and then we'll get the episode out
All
beforehand.
right. Yeah, so February 2nd is the deadline for the application.
Mhm,
And the top 10 will pitch. We'll give them free tickets, and then the winners will be announced as well. But
mhm,
we also have two new, not new, but actually repeating. We had it last year too. So two new competition, two additional competitions. One of them is a case competition of four universities who actually have like insurance programs. So the students will actually do a pitch, and then there'll be winner. Principal again is going to be offering a prize to the winning school. So we're really excited about that. And then we also have the UK group. So we partner with the UK DTI, I believe. They changed their acronym. I think it's DTI, but maybe that's the old acronym. I forget. But it's the Department of Trade, and they're going to be bringing different UK-based insurtechs to our conference, and they also do a pitch competition as well. So
Mm.
yeah, those are at least the three competitions so far that we'll be hosting. And then we'll have expanded our expo space. So one of the things that we heard from a couple of the carrier leaders that we knew was that, our expo didn't have enough companies. So we
Right.
thought, okay, let's expand and actually add a few more startups. So and there's some startups, some larger vendors, but we tend to have a lot of more startups, like earlier stage startups in our expo area.
Hmm.
And we have expanded that. I think we added at least maybe 20% more capacity.
Right.
And then we changed the agenda a little bit. So we is sometimes our attendees just kind of stay in the rooms and they don't explore the expo.
Hmm.
So we created dedicated time so they would actually explore the expo.
Hmm.
And so yeah, there's kind of we tweaked a little bit, try to make it a little more engaging, and we'll continue to kind of improve it. But hopefully this year will be the best conference we had.
Yeah, amazing. Well, I
Yeah.
look forward to it. And as I say, I'm not being disingenuous. It's my favorite. It's also my most
Okay.
I do the most business out of it. That's probably shamelessly why.
Yeah.
I've always found that when I want to get a meeting with the
Yeah.
person, I can get the meeting I want, and I think it creates a quite a friendly environment as well because it's only so big. It's like 1,000 people. You see these people, over the couple of days. You bump into people again and again, and I think that develops something. And it's just different, like it's not to, as you say, it's not to say like ITI or ITC are they're just different animals. It's a very different agenda. I go to ITC and there's 8,000 people there. I'm doing 60 meetings over 2 days, and it's almost like a volume play, and it's just a different kind of strategy. But I think for me, for someone someone that does my job, is I'm actually quite introverted, and I find conferences
Mm.
absolutely exhausting. And it sort of strikes the balance there for me as well. Um, Tony, one thing I wanted to kind of talk about is which you mentioned all the other things you do. You do have this investment fund. I think it's really interesting because you get in really early, but you've built this kind of relationship with the startup community. So I wanted to talk, are there any kind of recent investments that you want to talk about? Is there any developments with your portfolio? Because we make a big song and dance about when we invest, and then you sort of go, well, how's that going? And how close do you stay as an investor? Are you quite active as an investor group?
Yeah, I know. I really, we're happy to share how our fund is doing and answer any questions around that. But I mean, we basically started this fund a little later after we had created the other kind of initiatives I talked about,
Yeah.
and because we saw a little bit of a gap, actually quite a big gap in kind of the early stage area. So a lot of
Hmm.
startups were needing capital in the earlier stages, but there weren't many investors out there, so they were kind of
Mm.
struggling. And at least at the time, a lot of Insurtech VCs were bigger. So they were kind of going more upstream, investing in Series A and later. And so we thought there's a bit of a gap in like pre-seed to seed stage. And so that's why we created the fund. But David and I don't come from traditional investment background. And so we started a
Mhm.
very small fund and then made some investments and actually, did quite well.
Mhm.
And if you think about it, we should be doing all because we see so many startups. Like we probably see like close to 1,000 startups a year across all our
Mm.
programs. And we also get a lot of inbound. And then we also understand what the carrier and broker customers or partners want because like they're part of our corporate membership and they tell
Mhm.
us what they want. And so
Mhm.
we should be making good bets, but we weren't sure because we've never done it before. And so
Mhm.
we got backings of various people in our community to invest in our fund, and we ended up putting in small checks to about 16 companies. And
Nice.
after 4 years, they're doing quite well. They're doing 21% IRR. And we had an exit, actually a UK-based company exited from our fund.
Mhm.
Quanti, exited to Guidewire as one of our portfolio companies.
Mhm.
So yeah, we felt pretty good in our ability to invest. And so we started our second fund couple of years ago, and we're just
Yeah.
wrapping up fundraising for that now. But we
Hmm.
already invested in 11 companies, and four of them had a markup. So yeah, so far it seems like our formula, our ability to make decisions has been working out.
Yeah.
Yeah.
What do you? I find this really. I'm really fascinated in this, and yeah, since I came into this space, obviously I came from corporate insurance, and then now I'm, been 5 years really working with venture-backed startups and scale-ups, and it was only when I started to sort of get to know the VC community, when you're in that early seed stage or like pre-seed stage,
Yeah.
particularly, I sort of thought, well, I'm not from an investing background. And then it was only when I was talking to Adam Blumenkrantz, and good friend of mine, and
Yeah.
obviously now in his own now running his own gig, but when he was his investor hat, he said, Alex, all you're doing is evaluating, do you think this team can do it? Because he
Yeah.
was saying, essentially A grade team, C grade idea is still more investable than, the reverse of that. And so I
Sure.
started, making some investments. And actually, to your point, I actually
Wow.
invested in a life and health business this week. Um, just because I wanted to demonstrate that that I have an interest in that market because everything else has
Yeah.
been traditional P&C. But I'm looking purely at team, and I'm like, do I believe this founder? Do I believe this team? And then
Yeah.
that's my simple thesis.
Mm.
Is that what you're looking at? Do you have specific themes that you follow? Yeah, what
Yeah.
drives that kind of investment criteria most for you?
Yeah, sure. So we do look at the founding team, but I would say we look at other factors too. It's not the only thing
Hmm.
we look at. And yeah, I think founding team has a huge, they're probably one of the biggest reasons for one's success, but there are
Hmm.
other. So also, what does that mean? Like, what founding team? How do you know they're good, right? So,
Yeah.
yeah. So I mean, so there are different things we look at. So if you're a founding team, what we look at is, have they done something similar before?
Hmm.
Are they a serial entrepreneur? But even that's a little bit dangerous because if
Yeah.
they've done it once and somehow they made it successful, they might
Hmm.
have gotten lucky. Who
Yeah. Yeah.
knows,
Yeah.
right?
Yeah.
Because a lot of times luck is involved, or basically what I mean, I'm sure they did a lot of things great, but maybe there are
Mm.
things they got lucky on, but they
Yeah.
believe that they should continue to do those things where they could have done better, right? And then so they get
Mm.
kind of stuck in that way. And then a lot of like first time founders like fail on their second idea, right? So
Hmm.
we have to also like if you're a first time founder and you made a lot of money, then
Yeah.
you're gonna be maybe a little less motivated on the second. So like
Mm.
you have to kind of understand like what is their motivation and why this idea. Maybe they're good at some other idea and the insurance is a new world, right? And
Yeah.
so and then they work on it and realize, oh, this like carriers don't respond to me like I and they give up, whatever, right? So that could happen too. So like
Mm.
you really have to understand like what is their motivation and do they have like some level of experience and also the other thing we really like is if the founders have some level of financial, stability,
Yeah.
right? Where maybe when we invest in them instead of paying themselves, we're okay paying founders paying themselves, but instead of just putting more money to their pockets, they would try to hire more team members and try to grow. So those are some things
Mm.
we look at for the founding team.
Mm.
Um, yeah, and then we also definitely look at the idea and the market, right? Are there competitors out there? Oftentimes, actually having competitors is actually a good thing.
Yeah.
New idea is very difficult to put into market, and we have made some bets in the new idea, kind of new opportunity space, and typically, they don't work out. I mean, I don't want to discourage founders who has new idea, new market, but it's very difficult. So we do like having someone at least having attempted it or like having competed in that space. So we look at those things, and we like to invest in companies that have some level of traction though. So if it's an idea on napkin, we may still invest, but we learn that of the portfolio companies are performing, those who invested with some traction tend to do better.
Yeah. Yeah.
So we're kind of moving upstream a little more, and so focusing. We're a seed stage investor anyway, but doing more, a little more seed, and we kind of done some Series A as well, like Series A level companies too.
Yeah.
It's just de-risk the investment, so it's kind of what we're looking.
Yeah, it's interesting because I definitely have different strategies for different stages, but
Yeah.
the later stages, my checkbook's not big enough. So, but it was funny you sort of talk about founders paying themselves. And there's this founder that I just don't, there's obviously people in the market that we don't get good energy from. And I knew someone on their team and they just raised a lot of money. And
Yeah.
they were close enough to the CEO founder. And I said, let me guess, as soon as you raised, did they up their salary to in excess of 300,000? And they were like, yep.
Yeah.
And I was like, I thought so.
Yeah, and those are the founders that, I mean, they could work out. I mean, who knows?
Of
But
course,
yeah,
you know,
different
but it was like
options. So,
that was one of my red flags for later stages.
yeah,
The second was when I get on the plane and they're traveling to a conference.
yeah,
It's like,
yeah.
where are they sitting on that plane? If they're flying
Yes.
business
No,
everywhere,
that's David's. David has a very pet peeve, and there was a founder, and they were on the business class or first class, and he
yeah.
got really irked, and he's like, "We're not investing in that company." So I was like, "Okay, maybe they have points. Like, who knows, right?"
Yeah,
But
I know. That I mean, that's the truth. But yeah, it really made me laugh actually because I thought that those are the little things, aren't they?
yeah, yeah,
it's like when you're doing hiring decisions. Like one of the big things that people talk about is how polite someone is to like the staff on reception when they arrive, and it's these markers that they're really imperfect. But
yeah,
when you're investing at early stage, an early stage is even like Series A, etc. Like
yeah,
there's still such a long way to go to return on investment that you've got to look for markers, even if they're imperfect.
yeah, yeah, yeah,
I just before we go, I wanted to because I think the stuff you do with the MGA space is
yeah.
brilliant, and I've been in those rooms. That seems to have a real community about it. So yeah, could you just sort of explain, the MGA track you run, which is outside of the conference, and what's there? Because I don't think enough people know about that, and I think they should.
No, no, I appreciate it. So, MJ Lab is essentially an accelerator, and it's a program to help founders who are considering creating MGA or in the process of creating an MGA business.
Hmm.
You know, really get access to knowledge, all the
Hmm.
knowledge you need to create an MGA business, and then mentorship and then also ultimately we try to connect them, put them in front of carriers who could give them capacity. That's the program. So like in more specifically, what does knowledge mean? We help them kind of understand the regulatory things that they have to do, legal things they have to do, actuarial modeling, underwriting guidelines, like all the insurance stuff, right, that you need to
Hmm.
know, and mostly focused on by the US market.
Hmm.
And so, we don't teach them about like fundraising for just normal venture capital money or like product market. We don't teach them that stuff. We just assume that they'll get that somewhere else, or like they just know how to figure that out. We're only focused on the insurance aspect of creating MGA. And so, yeah, so that's kind of the program. And then all the mentors we connect them to, we give them like 4 to 5 mentors, actuarial mentor, legal mentor, underwriting mentor, program mentors who's done it before.
Hmm.
And it's a pretty rigorous, like 3 months program. They come to New York just a few days, like couple days in those 3 months program, and then most of their work is done virtually. And yeah, so that's kind of the program. And every year we select about 12 companies to go through it. And our kind of like, I think our success criteria for the program is, did they get capacity or not? Right. So that's
Hmm.
kind of one of the key success criteria that we have, that we put on ourselves. And obviously we work with the MGAs to do it. And I will probably say about half of them get capacity.
Yeah.
And then the other half that don't get capacity is usually because, like, we also get some founders who have another business. So it could be like a broker business, or it could be a software business. And then they think that they could leverage their distribution or data to create a new MJ business. And then they join the program and they realize it's a lot of work, right? And
Yeah,
so
yeah,
and they're like,
yeah.
and they kind of like, push it off, and then they decide not to pursue. So that's happened. We also had a few actually companies where they got capacity, and actually they did get capacity, but they didn't continue because they didn't get funding, venture
Right,
funding.
right.
And most of the time, these were kind of new ideas, new markets, which
Hmm.
it's just difficult to
Mm.
kind of build. And so those things do happen. But basically, for the most part, if you're a founder who really are focused on the MGA business that they have, majority of them do get capacity.
Yeah. Yeah, it's a really good program, and I think if anyone's looking to set up an MGA or has a new idea, I think it's one of the best things to be involved with. Because that 3 months, I mean, that's a stunning hit rate that like half get capacity. But if they don't, it's as much to find out it's not for you, or it's the idea doesn't have legs, or it doesn't have the
Yeah.
support, and then all you've invested is 3 months rather than slogging away for 18 months of your life and realizing it doesn't work.
Yeah.
Tony, we're at time. I knew we would. You've got
Yeah.
too much to talk about. So let's remind everyone of those dates again. What's the date of the conference, just before we forget?
Yeah, it's March 30, 31st in New York, Chelsea Piers. And yeah, it should be a really good one. I think we had more registrations at this time than years past, like by many, like maybe like 50% more. So
Right.
we're not going to exceed, more than, I think the max capacity for this venue is probably like 1,100 or whatever. So
Yeah.
I hope we don't run out of tickets. But anyway, what I mean to say is it should be a really highly attended, engaging conference. And usually we also have some other events surrounding the conference. Usually we have other partner events the day before or day after. And so, you can kind of make it like a multi 3, 4 day kind of, trip to New York if you're coming from outside.
Yeah, yes. And I would recommend people do that. I usually like making my annual pilgrimage to the Classic Clark. There's always someone having an event there, which is always great fun.
Yes.
Because I'm such a petrol head, so I love it. Tony, thank you so much for being a guest. Real pleasure. And I look forward to seeing you in March, if I don't see you before.
Sounds great.
All
Thank
right.
you. Thanks for having me,
Thank
Alice.
you.
Okay.
Cheers.
Bye-bye.